All right, everyone, what's going on? This is Ryan, aka Cantor and Clark, and it is 12:45 p.m. New York time on Sunday, April 19th. And this video is going to be a bit different than my traditional video approach. Normally we get into the technicals and get into analysis, but I just want to talk about this story that has been shared recently. As a reminder, before we get into anything, as long as you are a subscriber to the channel, so you have to be a subscriber to the channel to qualify. If you leave a comment on the video, you'll be automatically entered into winning $100 in Bitcoin. So if you've been on Twitter recently or on any of the more popular crypto media publications or websites, you've probably seen this story. And I think it's an important one to cover. As this states on the Financial Times website, the flagship Renaissance Fund dabbles with Bitcoin. So Renaissance Technologies, specifically the Medallion Fund, is getting involved in Bitcoin trading. They will be trading on the CME, or they'll be trading the CME contracts. Now, if you're not familiar with Renaissance Technologies, I suggest you pick up this book right here. I don't have a ref link, and I do not make a commission off of this whatsoever. This is just a suggestion. I highlighted this book on Twitter a few months back. When it first came out, I bought a copy immediately, and it's been on my coffee table ever since. It's the story of a legend, all right, in the space. The story of James Simons, okay, and the story of Renaissance Technologies. Now, it doesn't specifically get into the strategy, and this is for obvious reasons. Their strategy has been under a veil of secrecy, okay, as are many other hedge fund strategies for good reason. But it talks about Renaissance Technologies. It talks about what makes them unique. They're based out of Long Island. From a performance standpoint, they are second to none. They have lapped the field in terms of performance in annualized returns over the last 30 years. To say they're incredible is an understatement. Renaissance Technology, specifically their Medallion Fund, is unlike other traditional funds. The firm in general is unlike other traditional firms. They are not filled with financial types. So this is a firm that is built entirely by mathematicians, physicists, statisticians, and the like. Their trading floor would not give you the impression that you're on the trading floor whatsoever. It's not filled with, everyone having 15 different screens and tickers and charts. It's a quiet office floor as described in the book. It is the most dominant player the field has ever seen. There's no glitz or glamour. If you go on to other hedge funds, other asset managers' sites, there's always so much dressing on the front page, right? This is all for prospective investors. Okay, it's the facade. You go to Citadel, you go to D. Shaw, and then you go to Renaissance. And it looks like something that was built on a WordPress site. And that's because they know what they're worth. They don't need to create any type of window dressing. And this is actually just because, when I think about it now, what's the reason? They do not manage outside money. Okay, as far as we're concerned, Renaissance Technologies Medallion Fund is only managing employee money. So how lucky are you if you are an employee? And if you want to be an employee, just go to careers, because as you can see, these are the positions that they're looking to fill. All right, nowhere do you see derivatives trader, nowhere do you see fixed income trader, anything like this. Renaissance Technologies, they are a high frequency trading firm. All right, they are typically involved, or they're focused on rather, short-term trading, sort of systematic strategies. They are involved in things like pairs trading, stat arb, cutting edge. Okay, and one of the things that they talk about in the book is how for the amount that they're investing in their models, they're doing the same amount of investing in their technologies. Okay, Renaissance Technologies for a reason. The type of machinery or technological platform that you need to consistently and continuously model the data that they're modeling is obviously, it cannot be anything short of cutting edge. So they're going to be getting involved in trading CME Futures contracts. Now, just to give you an idea of their performance over the last, I think, 30 or so odd years, this is on of dollars in data. Nick Majuli is a data scientist for Ritholtz Wealth Management. I'm sure many of you follow Barry Ritholtz on Twitter. If you don't, give him a follow. Okay, this gets into Renaissance's portfolio, or rather Renaissance's fund growth versus the S&P 500 if you invested $1, and this goes all the way back into the 1980s. All right. Now, this is if you invested $1 with their 40% fee. So traditional hedge funds, okay, normally the fee structure or the status quo was 2 and 20. So 2% management fee, 20% performance fee. As of the last few years, this has become less and less popular because it's become less and less accepted that hedge funds just return basically what the benchmark is returning, or just return beta. So they're not really returning alpha, but that is not a problem that Renaissance has had. Okay, so you could see that before 1990, $1 invested in Renaissance, okay, would be about 500 plus some odd dollars now, whereas $1 invested in the S&P would be $20. Okay, and this is including their 40% management fee. So to command a fee that high means that you need to be performing obviously at an unforeseen, incredible level that no other hedge fund has matched. And that is the story of Renaissance's medallion fund. Okay, so they're going to be trading the CME contracts, and they're going to probably be trading what they have been, or rather their approach is probably going to be modeled around the same approach they've had in traditional markets. I'm sure they will tailor it to the crypto markets. Okay, a lot of this is going to be high frequency, short-term trading. All right, this is not going to be buy and hold whatsoever. Okay, this is not going to be on likely predicting where price is going to be in the next week. It's probably going to be around trying to predict where price will be within the next few seconds, within the next few minutes. Okay, one of the things that they use, excuse me, is pairs trading. Okay, so I've actually been working on Python recently, and I just got into my first pairs trading algorithm project. All right, and so what we do is, or what is done is, two assets that are trading with a high degree of correlation. You'll model them, identify what the spread is, obviously normalized because you cannot take the spread between the asset prices. So we'll model their behavior over time, okay, see what type of relationship they have been in, and when the relationship more or less comes out of whack, we'll either buy one, sell the other, or so forth. Okay, when the basis, okay, the difference between this relationship either opens or closes. Okay, so this is just one of the popular approaches that Renaissance has, but I can't imagine what type of pairs trading they would do if they were just trading crypto, because you can pairs trade something like Bitcoin and ETH. You could pairs trade Bitcoin with any other highly correlated pair. Someone might even argue that you can pairs trade Bitcoin with the S&P 500 lately. But they're going to be trading on the CME. Okay, the CME is a cash-settled futures contract. It's important to understand that this is not something that is going to likely cause appreciation in Bitcoin. It is not something where they're going to be taking supply off the market. Okay, the benefit of trading on the CME is obviously mitigating counterparty risk. All right, now they don't have to worry about the exchange. They don't have to worry about holding on to Bitcoin. They're just going to be trading the futures contracts. All right, these are a bit different than futures contracts that you are probably familiar with on something like, the inverse perpetual swaps on Phemex, or linear futures contracts. If we talk about physically settled futures contracts on Bakkt and CoinFlex, or you talk about BitMEX, these are different. Now, the contract specs with these, all right, one contract is 5 Bitcoin. So one contract is 5 Bitcoin. So right now, I think one contract would roughly be, I think it was just recently, the Bitcoin price is what, 7,129. So about 30 somewhat $1,000. Okay, if we do the math on that real quick, so 7,139 or 29, we'll just say 30, and one contract is about $35,000 right now. And it's important to understand that sometimes the amount of money or capital that is exposed on the CME, although it appears much less than the volume traded on something like BitMEX or any of the crypto exchanges, sometimes the amount of capital at risk is actually pretty close to what is at risk on crypto exchanges, because on the CME, the initial margin that you need to put up is around 33%. So to open up a contract, your maintenance margin is $11,682. Okay, so as you can imagine, if you were to take volume in something like BitMEX, which is a notional volume that is built up largely from, or rather you'd have to imagine that a lot of it is from high leverage trading. If you compare that to CME volumes, you could see how they could be relatively close at times, given, or rather the capital put up to trade the notional amount could be relatively close at times, just because there is such a large difference between the initial margin required on the CME and the initial margin required on something like BitMEX, which is 1%. All right. So this is pretty interesting. Okay. They're going to be trading likely high frequency trading strategies on the CME, right, around the Bitcoin futures contracts. What do I think about this? It doesn't likely lead to any higher prices in the near term. All right, because again, this is not something where they're taking supply off the market. But what I do think is that it just ends up legitimizing the asset class and the asset even more. The Medallion Fund, it's not a public fund by any means, but it is a huge name in the space. Now, high frequency traders, stat arb, pairs trading, any type of highly quantitative systematic trading strategy, they definitely can appreciate a volatile asset class. So the problem with this asset class for a lot of asset managers, whether you're talking long only funds, any type of traditional asset manager, hedge funds, is the one, counterparty risk and lack of liquidity. So it's costly from a transaction cost standpoint and a counterparty risk standpoint. So they're going to be using the CME, which mitigates obviously a degree of that risk. And I would like to start paying attention to overall CME volumes to recognize whether or not there's a noticeable pickup or a noticeable presence based on them being involved. Okay, so this is pretty big. If you want to check out this article, just go ahead and Google it because it's all over the place on crypto media. This is on Financial Times. Nick Majuli gets more into the Medallion Fund on his website of Dollars and Data, specifically the Medallion Fund. And if you want to learn more about the CME contracts, specifically contract specs, the curve, because in this case does have a term structure. So you could see the front month right now, April, then you have May. Obviously, there's not much involvement towards those latter months, towards those back months. Most of the trading is short-term trading, just like most of the trading in crypto futures on crypto exchanges, rather. Most of it is localized towards near-term expirations and perpetual contracts to begin with. So this is interesting. This is good for the space. And if you guys have any opinions on this, feel free to leave them in the comments. I would like to hear what your opinions on this, what this means for the crypto markets as a whole. I think it's good. I think that it brings more attention to the space, and I think that, like anything else, when you have more attention, more light on the space, that it eventually will grow. So we are very early, even though we're over 10 years in, it is still very early. So that's that, guys. If you have any questions, feel free to reach out. This is Ryan, aka Kenner and Clark with BlockRoots. As always, exercise proper risk management and trade effectively.